So today, we've got a really strange story for you, a true paradox, from the latest earnings report of the digital infrastructure giant Equinix. On the surface, their numbers look like a clear miss, but instead of the stock tanking, it soared. So what did the market see that the headlines missed? Let's dive in and figure it out. All right, so the story starts on February 11th, 2026. Equinix drops its fourth quarter results for 2025. And, well, at first glance, things did not look good. The headlines painted a pretty disappointing picture. Just look at the numbers here. The two big metrics that everyone watches, revenue and earnings per share, both came in below what Wall Street was expecting. You can see revenue was about 40 million short, and earnings per share missed the mark too. And in the world of quarterly reports, a double miss like that's usually the kiss of death for a stock. But then, something completely unexpected happened. When the market opened, the stock didn't fall. It didn't just shrug it off, it exploded. We're talking a surge of over 10% in a single day. This was absolutely not the reaction you'd expect. So what was really going on here? So that's the big mystery, right? What did smart investors see in this report that the initial headlines just completely glossed over? The answer, well, it was buried deep inside the numbers, way past the top line. Okay, so the first clue, it's not in the numbers people usually look at. To really get what got investors so excited, we have to look past the reported revenue and turn our attention to the company's bookings. So, what's the difference? Well, think of it this way. Revenue is basically a look in the rearview mirror. It's the money you collected last quarter for work you already did. Bookings, on the other hand, are all about the future. They represent the new contracts the company just signed. They're a super powerful signal of where the business is headed. Bottom line, revenue is the past, bookings are the future. And this right here is where the whole story changes. While revenue was a miss, Equinix's Q4 bookings absolutely exploded. I mean, look at this chart. They hit a record-breaking $474 million. That's a massive 42% jump from the year before. This wasn't just a little bit of growth, it was a huge acceleration. You don't have to take my word for it. The company's own chief financial officer, Keith Taylor, basically ignored the headline miss and said this, calling it their best quarter ever, by far. Wow, that's some serious confidence. So what on earth was driving this incredible strength? The catalyst, the thing that was fueling this fire, can be summed up in just two letters. AI, artificial intelligence, was the engine behind this massive surge in future business. Get this, a whopping 60% of their biggest new deals in the quarter were all for powering AI workloads. AI applications need just immense amounts of power and connectivity inside data centers, and it's clear companies are rushing to Equinix to build that foundation. And it gets even better. It's not just that there are more AI deals. The deals themselves are just better. They're richer. On average, these AI deals needed about 33% more power than a typical non-AI deal. And of course, more power means more revenue, which makes each of these wins incredibly valuable for the company. Now, you might be thinking, okay, so it's the big tech giants building their AI. But here's the real kicker. It's not just them. The truly surprising part of this story is who is driving all this demand. This AI trend is spreading way beyond Silicon Valley. The CEO, Adaire Fox-Martin, laid it out perfectly. Of those huge AI deals, almost half came from what you'd call traditional enterprise companies. Think about that. We're talking retail, manufacturing, finance. This is proof that AI isn't some niche tech experiment anymore. It's becoming a core part of business strategy for, well, everyone. And we're not talking about small startups here. We're talking about huge household names. You've got Salesforce, the industrial giant Honeywell, the high-frequency trading firm Hudson River Trading, and the AI analytics platform Alembic. They all signed major deals to power their AI strategies on Equinix's platform. This is real, tangible, widespread adoption. So let's put it all together. You've got these record-shattering bookings, and they're being supercharged by this massive, widespread AI adoption wave. When you see that, it's pretty easy to understand why Equinix's management felt confident enough to issue a really strong forecast for the future. And this is what investors were really cheering for. The company guided for 9 to 10% revenue growth in 2026. But the crucial part was their forecast for 8 to 10% growth in AFFO per share.
You can think of AFFO as the real cash profit the business is spinning off. This is where those huge bookings we talked about turn into actual, tangible profits. And that's what got investors so excited.
All right, so let's pull back for a second and look at the bigger picture. What does this one crazy earnings report really tell us about what's happening in the world of tech right now?
The big idea here is that this whole AI boom, it's not just about fancy algorithms and software. It's just as much about plumbing and real estate. It needs a massive physical build-out of infrastructure, the data centers, the power, the cooling. This Equinix report is the perfect case study of the essential, gritty work being done to make our AI future a reality.
And I think the CEO, Adair Fox-Martin, said it best with this quote. Equinix sees itself at the dead center of a historic, multi-year investment cycle, building the literal foundations of an AI-powered world. They truly believe their entire company was designed for this exact moment in time.
So that leaves us with this one big question to think about. We talk all the time about the companies writing the code and creating the AI models, but this story forces us to ask a different question. As AI works its way into every corner of our economy, who are the companies that profit from building its physical foundation? It's a question worth keeping in mind. Thanks for joining.